Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The sports business is going through some major changes, and ESPN may be the next company to go through a major change. Based on Bob Iger's comments last week on CNBC, it'll be interesting to see how this plays out, but I think we're starting to see exactly what the future of ESPN might look like. That's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the show notes. I go through a lot of concepts there that I'm going to touch on today, so that gives a little bit more context to how I think about this industry. But the comments that Iger made was that ESPN could potentially be looking for partners. Now, that sounds a little bit strange given the fact that this has been a core asset and one of the most powerful brands in sports for decades. So why would ESPN be looking for partners? Well, there's a couple things that we know. One is that ESPN Plus is going to be included in the Disney Plus app. There's going to be one app that customers are going to be accessing to access Disney Plus content, Hulu content, and then ESPN Plus content. So basically, Disney is starting to create kind of its own cable channel, if you will, with all kinds of assets. We also know that eventually ESPN is going to go directly to consumers. That may be within that app, or it may be a separate app. We don't know exactly what that looks like. But if you're going to go direct to consumers with an app like ESPN, one of the challenges you have is you have to have a ton of content. I'm not sure that ESPN alone has enough content to create a viable app. So they might be looking for content partners. Think TNT, think the Bally Sports Networks. Remember, these are the networks that went bankrupt. They're owned by Sinclair Broadcasting. Those regional sports networks were sold off by Disney as part of the acquisition of Fox assets, but they were not financially viable because the cable business was dying. Now, we know that a company like Warner Discovery is dealing with some of the same challenges because their cash cow in cable is starting to die. They have both of those businesses, and we can lump in NBC Universal, which has the Peacock app that has not been very successful. Olympic assets, think the Tour de France. All of these businesses have sports assets, and the sports business behind them is not only not very strong, but it's getting worse. So I think Disney could go to them and say, hey, we have plans to build an ESPN app. We want to have not just ESPN content, but everyone's sports content. And we're going to be the one sports streaming channel that people subscribe to. Think about the pricing power that you could have with that. Disney was charging reportedly over $10 per subscriber just for ESPN. And that was really the power behind the bundle that Disney served to a lot of the cable companies. Could the same economics work with a streaming service? Would people pay $20, $30, $40 a month if they got access to every NBA game and all Olympic content and all kinds of other sports content? Remember, on the internet, we're dealing with a world of abundance. You can watch anything at any time. This isn't linear TV, where the challenge serving up Olympic broadcasting was there was only 4 channels to put it on. They could put it everywhere. I think this is really the vision of ESPN and of Iger. When he says partners, he doesn't mean that he's going to be selling a piece of ESPN. He means that he wants ESPN to be the hub for sports watchers around the world, no matter what they want to watch at any time. And that includes partnering with others to sell them or license them content. That's, I think, ultimately the vision for ESPN. And it makes a lot of sense, because this is where the future of content goes. If you're one of these sports, you're either going to have to license your content to somebody else who's going to then bring it to a streaming service, or you're going to have to build out a streaming service yourself. Building out that service yourself is not going to be all that attractive. So who has 100 million subscribers or more to leverage and a brand name? Well, the options are really Netflix or Disney with ESPN. I think Disney and ESPN make a ton of sense as the place that is the future of sports on streaming. And I think a lot of content eventually ends up there. But we will see how this plays out. Just think about that and that strategy going forward, because I think that's probably more likely than spinning off ESPN assets or something like that. Because a lot of these sports leagues, a lot of these channel networks that have sports distribution rights are in a lot worse financial position than you might think. Puts Disney in a little bit better position than I think a lot of investors think right now. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.